Hello traders, the title of the video is how to dissect price structure like an alien wave guru. Alright, so you may be saying, George, are you saying that you are an alien wave guru? No, I say like an alien wave guru. Alright, so if you are new to us, okay, this is how we start our discussion today. We want to dissect the price structure like an alien wave guru. What I usually say to traders is this, that ordinary traders look at the price and they will say that the price went up from here to here. An alien wave trader will dissect the price move and will look at the internal wave, the structure of the price, and will talk about how the price did move from here to here. All right, so today we will be talking more about dissecting like a surgeon, okay, the price structure. So talking about an alien wave guru, there is a story that the alien wave guru will tell you because they understand the structure of the price. Okay, it's like you go to a historian and they know the history of the nation, and they will tell you that history. All right, so the same thing is happening in the financial market. The alien wave gurus understand the price structure, they know them all, and when you go to them and you present them with a chart, they can tell you the story of that chart, of that stock, of that company, and they can even use that past to forecast the future. All right, this is the exercise we are about to do today, and my intention is to help alien wave traders to start adopting the mindset of alien wave gurus. All right, so you may say that this is a fancy word. Well, it may be a fancy word. As a YouTube creator, we try everything to get the attention of traders, and here we are talking about alien wave guru. All right, so we're going to look at this financial instrument today, All State Corporation, EPIC ALL Alpha Lima Lima, belonging to the financial services sector, insurance, property, and casualty. All right, so I want to leave it to trader to look at the chart for a few seconds. Okay, try to see if you have recognized a pattern, if there is something that you have noticed. All right, look at it for a while as I'm talking to you now, and then I will start talking about it. Even when I finish to talk about it, you may compare what you think of it with mine. Okay. It looks to me that this stock, when it was trending, looks like a trending phase. See how it went up, boom, 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 up. Looks to me like a trending phase. In fact, if you say 1, 2, 3, 4, 5, is that good? Something like that. So it looks to me there was a trending phase here. All right. And then after that, there was a correction. How do we know? Because the people did take profit. Allow me to draw a line this time, because I will start counting away from here. So don't get upset with me if I'm not using my numbers. All right. So then we have a correction. We'll color that correction into red. This is the story that the alien wave guru will tell you when they look at this chart. Now, a lot of ordinary traders at this point in time will say that then there was a trend. An ordinary trader would say there was a trend again here, and then there was a correction. But this one, the alien wave guru will not say that this is a trend. Why? Okay, let's look at it for a second. All right. Is it a trend in fact? So you may say, if you are a new trader, you may say, okay, Joe, can't you see there was this move up? And then we have the second wave of that trending phase. And then we have, okay, the third wave, which is the longest. And we have the fourth wave right there, George, you stupid boy from London. And here it is, the fifth wave, all right? Now, I'm not saying that it's wrong. A trader may look at it and say that there's nothing wrong with it. We can, okay, deny it, all right? But an alien wave guru will smile and say, no, let's check something first, all right? Let's check something first. Hold it there, my friend. We are not ordinary trader. We will dissect this price structure. Though it looks like 1, 2, 3, 4, 5, it's not a trending phase. Why? Because alien wave gurus understand the story. So they will say, all right, this was not a trending phase because the price did not go above what? Which level? the 138.2% Fibonacci extension level of that supposed to be a trending phase. Are you getting the message now? So when ordinary traders are calling this a trending phase, you, as an Elliott wave practitioner that understand the structure of the price, that can dissect the price structure, knowing that there was a trend before from 1994 to 1998, followed by a correction, this is not a trending phase. In fact, you will correct those traders and say, look, what you are calling a trending phase is a gigantic, a flat correction, and that flat correction has ended right here. Now, are you feeling like an Elliott wave guru? What I'm trying to do here is I'm trying to help traders to be a little bit more confident as an Elliott wave trader. So you may say, Joe, I've been learning Elliott wave for 2 years. Now, if you have learned the most powerful tips and tricks in the financial market, you can start feeling confident, all right? After 2 years, well, you have listened to my voice, you have watched other videos, you play around with all kind of tricks, you should start feeling confident a bit, yes or no? So it was a gigantic, flat correction. Now you may say, oh, George, that's completely wrong. And then we will go into the mind of an Elliott wave guru. You will say, George, the flat correction. Do me a favor, George. According to the wave principle, is 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Here you have 1, 2, 3, 4, 5. Why is he 5? And I will say to you, you are unbelief boy because you asked a very important question. So the Elliott wave guru will look around and say, okay, my friend, though it looks like 5, it's free. And you may say, tell me more, tell me more, tell me more, tell me more. All right, here it is. And we say, okay. As George Trio has said to traders at 24 Stock Trader YouTube channel, talking about price structure, George was telling traders that whenever the price goes up one like this and the people say 5, blah, 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 just behave like a little child. Okay, say the little child will say price went up like this, the price went down like this. And then what will they say here? Look at it. A little child will say, then the price went up again. You will say, no, it didn't go, it went up and pulled back. And the little child will say to you, then it did go up like this, yes or no? If you are not sure, ask your children, they will tell you. So, though it looks like 1, 2, 3, 4, 5, as we can see here, is 1, 2, 3. Now, other traders may disagree with me. That's fine. The disagreement is normal, but we are still friends, all right? Friend can disagree, do you know? Our friend can disagree. Though it looks like 1, 2, 3, 4, 5, the warning that we have is that the price has failed to go above the 138.2%, that critical Fibonacci extension level, okay, of the prior trend. It's not a trending phase, it's a correction. It is 1, 2, 3. Now, one more thing I want to share with you very fast so you do know a very powerful price structure I want you to remember is this, okay? We say to trader minimum price move is free, okay? Yes or no? And you already know it, but there's something else I want to show you here, okay? So the minimum price was free is something to do also with the ABCD, not ABCDE, but ABCD chart pattern. So price went up, pulled back, went up again, okay? So we say minimum price is free, we say to traders, all right? Prior to bullish signal above the point D for delta, and prior to bearish signal below. So this is a conversion point here, all right? What I want to add to that today, which you will keep to yourself, don't tell anyone because we are saying on YouTube, public place, all right, is that if the last portion of that, 1, 2, 3 is also subdivided into 3, you have a high probability 1, 2, 3. It's a fractal pattern. So a bigger pattern that is from 1, 2, 3 got the last portion also subdivided into 3. Don't miss out, my friend. And this is the situation here. 1, 2, 3. But the last portion of that, you see, you have a 3 component. That's the first component, second component, third component. If the third component of the 1, 2, 3 is also subdivided into 3, be gentle, my friend. Be ready to trade like a pro using a top-down trading method. Draw the line implement a top-down trading method. You see how the price crashed down here? The last component has betrayed what is about to take place, which is again 1, 2, 3. The 1, 2, 3 is the minimum price move, all right? So we draw the line. If it fails to go above the high of that 1, 2, 3, in any case, we expect a reversal. So now a bigger portion, 1, 2, 3, is taking place. Now the last portion of that bigger pattern is also subdivided into 3. We will expect a reversal. The opposite is also true in a downtrend. Price goes down 1, 2, 3. The last component of that 1, 2, 3 is also subdivided into 3. Now, I'm not saying that, my friend, this is a magic one, that it will always work, but we can work with that. That's what I'm saying. We can work with that, and that is a high chance, not guaranteed, not always. That is not guaranteed. Control the risk, use the top-down trading method, draw the warning line, all right? But we can work with it. There's a high probability that we may see a reversal because it's a fractal pattern. A bigger pattern is developing. The last component is also duplicating the bigger pattern. This is it. All right? So this is what has happened here. So the area where traders say, no, Joe, do you see other traders say 1, 2, 3, 4, 5? The area where Guru will dissect the price and will explain to trader what's happening here. That is a flat correction. The one is noticing 1, 2, 3, 4, 5. Now, the reason why we need to understand this as an area way practitioner is because we are now maturing, going a bit higher, and we will be talking more about fractal pattern. All right, and we need to understand what is taking place and the language of the price to read the chart and to dissect the price structure. So now we see that it's a flat correction. A lot of area way practitioners may miss this opportunity here, thinking that it's a trending path, but we know better because of that 138.2% level and how we analyze the price structure. Here you will see, Joe, what is the 1, 2, 3, 4, 5? Now, there was a trader that asked me a very interesting question last time about the area way triangle. He said something to do with the price structure within the triangle. The trader was correct because in theory we should have 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. That's the ABCDE triangle. And the trader noticed that I'm talking about ABCDE triangle while the price did more than 5, okay, subway. Now, this is it. Talking about area where Guru dissecting the price, we say to trader, give precedence, give priority to the triangle itself instead of the structure of the price within the triangle. Why? Because, as I told trader in the comment section, is that sometimes the area where trader get into trouble and other traders will take advantage of them for no reason, is that we were expecting another wave pattern, yes or no? We want it to be neat like a science. 1, 2, 3, 4, 5, and then boom. And we feel like God, yes or no? Eh? And you are smiling, you say, yeah, I told you that there will be a breakout. Yes, you see, 1, 2, 3, 1, 2, 3, 4, 5. This is the power of area wave pattern, all right? But then sometimes we get into trouble because you see that it's 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. But then as area wave trader buy here, the price print something out, didn't go out. And then continue to oscillate and say, whoa, I'm not going anywhere yet. And then by that time, people get confused. They get confused. They say, 1, 2, 3, 4, 5. What's going on now? And then before the price pop out here. But the reason is that in a messy financial market, the price is the king. So we just flow with it. So the strategy talking about ABCD chart pattern is that we just want to buy. If there is a consolidation taking place in a triangle. So we can buy here. So this one take place. So the third one is up. So we can buy here. If it's put back here again, we can buy. So if it's going up, you manage it on the top because there's a resistance here. You're doing that. If it's going to pop out here, you will be part of it because all you are doing, you are just trading along this edge here. And you are managing somewhere here. Hopefully, they will give you another signal above, which means a higher low above any triangle is a high probability trade setup. A lower high below any triangle is a high probability bearish trading setup. So once we understand the area of a triangle, but we want to give priority to the triangle itself instead of the structure within the triangle. I'm not saying that we will ignore the structure within the triangle. Yes, when we see 1, 2, 3, 1, 2, 3, and then hit the 5 times here, well, we want to be buy, yes or no? Okay, good. But then, if the price continues to oscillate, doesn't mean that it has invalidated the Elliott wave theory. It's just the price telling that I'm not yet ready to come out. Continuing with our discussion today, Elliott wave guru. So we are here, the flat correction. So the reason why I'm mentioning this now, you may be wondering, where is the 1, 2, 3, 4, 5? Can you see the 1, 2, 3, 4, 5 here? It's not visible. Even if you go now on the monthly chart, you go to the weekly chart, you won't see it. You can see the price drop down. Okay, this is what we call it's a consolidation. This one here is a consolidation in a triangle. We talk a dynamic trend line. At a 2-4 stock trader, you 2 channel. The price is oscillating along that trend line. This one, dynamic trend line. So now you see why you should subscribe to all our channel. You see here, it's a dynamic trend line. It's a tiny declining channel, and it's indicating to us there will be a breakout. Look at the breakout. You see, dynamic trend line, probably going down in a tiny, squeeze channel, and we know that there will be a breakout. And here it is. Now, you as an Elliott wave trader, you wondering where it's 1, 2, 3, 4, 5. But the 1, 2, 3, 4, 5 is hidden here. I cannot show you. I can only tell you this is the third. You see, the third is usually the longest, so this is the third, the fourth, and the fifth. That's it. So what is the 1, 2? So you may say, George, it's 1, 2. all right. If you're happy with that, 1, 2. If you're happy with that, blah 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 blah. Before it pop out. Are you with me now? So this is what's happened. So it's a gigantic flat correction. So where are we now and where are we going? That's a very important question. All right. So now let's clear up a bit our chart and continue to dissect this price structure like an Elliott wave guru. You want to know the whole story, yes or no? Yes. So stay with us and watch the full length for this tutorial. Enjoy YouTube. Sit down, relax. Watch YouTube, all right? I spend hours on YouTube. I need to tell traders I like YouTube so very much. So, okay. So here we are. We know it's a flat correction. Okay. So what I'm going to do, so there was a trend in first, all right. Then we have a gigantic flat correction. And now we are here. We dissect that price structure already. So ordinary trader may say, George, well, the price went up from here to here, and then it came down here. And we say, yes, so what? It's not useful to us. All right, we can time the market, we can predict the market. In that case, Elliott wave trader, will forecast that the price will come down from here in 1, 2, 3, 4, 5. All right? Isn't it good to know more about Elliott wave? Elliott wave trader will know that there is a resistance here, combining the wave principle and the flat correction. All right? Elliott wave trader will know that this is not a trending first. All right? Are you now behaving like an Elliott wave guru? So now the flat correction is completed. So we will say that an Elliott wave cycle is completed. So what is an Elliott wave cycle? The Elliott wave cycle is formed of the multi-wave, 1, 2, 3, 4, 5, followed by the correction. The correction in this case is a flat correction. All right. So this is our gigantic flat correction. And that is completed right here. So the Elliott wave cycle has ended here. Following our wave count guidelines, we know that if an Elliott wave cycle is completed and the market itself become bullish, we have a bullish market environment. Are you following the story of the Elliott wave guru? The Elliott wave guru is speaking, all right, my friend, all right? So it's telling you, it's dissecting this price structure, telling you what has happened. So you may also use that to forecast the future for this stock. So the Elliott wave guru will say to you now, if an Elliott, according to our wave count guidelines, if an Elliott wave cycle is completed, we are likely to see a new trend, provided that, provided that the market environment is, good, all right, beneficial for a new trend, and the company is gaining more market share, excellent management is placed, being innovative, making more money, all right? There is a brighter future for the company. And the investor believe in the story of that company. And then they start buying. We are likely to see a new trend. If the fundamentals are not solid, if the market environment is not viable, all right, we may end up having what we call a complex correction. All right, so the correction may be prolonged. Though we may think at this point in time that the correction has ended, we may see something that we call X, followed by another type of corrective pattern. Those are what we call the combinations. All right. So now as the price start going up here, the area where gurus will start saying, probably, now we look at the reference point. So we check the date, all right? Here is the date, 2009, S&P 500. We are trading first the market before using the area waiver principle. The S&P 500, okay, start a bullish trend because of the Federal Reserve policy, all right? End of QE, quantitative easing, all right? And here we are. Money is coming out of the commodity market into the stock market in 2009. A new bullish trend is brewing. The market itself, the S&P 500, is turning from what? Bearish to bullish. Well, we want to keep eyes on the market and align our wave count with that strategy. So using the reference point 2009, we start calling this one here the first area wave. Does it look like a impulse wave? It looks like it's like a 1, 2, 3, 4, 5. Can you see that? All right. So let's put that. So at that point in time, all you do, all right, all you do, you see is, or you allow it to come out first, and then you monitor. So you just say the price start going up here. You don't know what's going to happen, whether it's going to continue to go up or whether it's going to crash. You don't know, all right, until it's completed. So you just use a top-down trading method. Price form, you see, almost a double bottom chart pattern here. In fact, it's a nice setup here. I want to highlight here. Can you see here? Retesting a high. At this point, you retest it, this high here. You retest it here in 2000, and here you come again and retest it. You retest it here, and then you retest the same place. Okay, did we talk about it? So there is a video that I posted recently at 24 Stock Trader YouTube channel, the only channel that I promised that I will make amazing channel. And allow me to refer you to that video. This is not about a joke. And when I was talking about how to day or swing trade using reliable, influential, okay, key levels, check out that video. Powerful video. I love it so much. How to day or swing trade using reliable, influential, key level precisely. Now, if you want to be my friend, promise me that you will watch that video. All right, that's it. Okay. So this is a cycle point, yes or no? All right, it's a cycle point. Here, how would we know? You turn around 180 degrees. Boom, 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 boom. It's a cycle point. A miracle usually takes place at a cycle point. The key levels at any cycle point are influential key levels. So we start counting wave. This is the first wave, subdivided into 5. 1, 2, 3, 4, 5. No area wave violation. And then a bit of a 1, 2, 3. So our second wave is completed here. No area wave violation. The second wave did not cancel the first wave. The market is improving. And now it's clear to us after this resistance is broken. See here, we gap up a bit here, betraying the buying activity here. Can you see that? The retest here, price breaks a bull, a retest. That's why I do all the time. It's amazing, isn't it? Look how, you see? So they come, they break a ball, break a ball, retest gently, and then gap up and run away. Beautiful, beautiful, beautiful. So let's continue our talk about the area wave guru. So now it's clear to us, this looks to us that the third area wave, if you disagree, let us know so we can all come down on you. All right. So now, is the price structure correct? It looks to us clear-cut, a third area wave. So far, so good. All right. You liking my numbers now? I'm getting used to it slowly. So fourth wave right there. And it looks to us that we are now in the fifth wave. Now the Elliott wave guru will tell you clearly that if you count your wave on one particular time frame and you stop on that time frame alone, you are only looking at a portion of the bigger picture. So it will make more sense after labeling those waves 1, 2, 3, 4, 5 on the monthly chart. It looks great. Now you may be, I know what you are thinking now. You are thinking, Elliott wave guru, how do we know that this is a trending phase? Did it go above that 138.2% Fibonacci extension level of the first trending phase? And I will say to you, yes, in my American accent, yes, it did go above that level. Now, just to make you laugh a bit, all right? So that 138.2%, that's the level. Okay, so we went above it now, see now? So we can confirm to ordinary traders that, my friend, this was not a trending phase. Now you can see it breaks above it. In fact, the third area we went above it, and then crash down below it. It's quite tricky here because if you were here, you see a lot of traders try to sell here. You would think they're going to stall again, that a trending phase will stall again here. If you were here, all right, see here, what has happened before is likely to happen again. That's why we are using the past to predict the future. They did sell it here, they sold it again here. Prior return to the same level, they try to sell again. Nothing wrong with that. Okay, here it is. Right. So we are above that 138.2% barrier that a trending phase has failed here. Now it went above it. We can say this is a trending phase. Should we use that word? You bad ordinary traders? No, don't mock anybody, all right? This is just to laugh a bit, all right? Okay? So now we are on the monthly chart. We see the Elliott wave gurus, and now we are now in the fifth wave on the monthly chart. So we say, hold on a second. George says that the higher degree wave count controls the lower degree wave count. That if we count wave even on the yearly chart, we must now use the next lower time frame, which is the monthly chart, to see the internal wave of the yearly chart wave count, yes or no. On the other hand, if you count waves on the monthly chart, we will go to the higher time frame to validate, our wave count. So it works both ways. Either you count it from the higher degree first, now you must use the next lower degree internal wave to validate your higher degree wave count. But if you count it first on the lower degree time frame, you must use the corresponding higher degree to validate that wave count. And any wave count that you have done, what should you do? You remember the story? From different viewpoints. So the viewpoint using different time frames and a viewpoint of other traders. So now you'll be saying, okay, let's go back again, George. Okay, are you following the drill now? Okay, what we want today to do, all right? So now you say, all right, I'm quite happy with my wave count. I'm satisfied with it, George. There's nothing else I want to add. But let's look at it again and see, will other traders count their wave differently here? Yes, some traders will count their wave a little bit different here. How? Well, those traders may say, George, I don't know whether the trend has ended here. I don't know whether. So if they didn't know a cycle has ended here, they may say, okay, this is the first higher low. George, this is the first higher low. And, this is an extended first wave. Okay, good. An extended first wave. Second wave. And third wave. But there is a risk. If that third wave does not continue, we are likely to have the third wave being the shortest multi-wave, which is the violation of Elliott wave principle. Hopefully, the third wave will not be the shortest multi-wave. Something like this. Now, you are laughing. I'm laughing too, because there's a bit of disagreement. So they will be saying, all right, there will be a fourth wave and then a fifth wave. So, all right, that's your wave count. That's our wave count. We are aware of it. So we just move on, all right? This one, there's no much disagreement. So we let them carry on with their wave count and we stick to our wave count, okay? Good. All right, so see you from the viewpoint of other traders. See you from the viewpoint of different time frame. Now we go to the yearly chart. This is its viewpoint of different time frame. So on the yearly chart, you can see clearly that an earlier way trader, an earlier way guru will tell people straight away that the price action on the yearly chart from here all the way up here is not a trending phase. Why? Because we know in the language of earlier way, if you are an earlier way trader, if you have been following up for some time, 1, 2, 3 like this, it's not a trending phase. It's not a trending phase. The trending phase is not subdivided into 3. And again, reality price came back again to the starting point almost here. So it makes sense to start counting wave from here. All right. Also on the yearly chart, it's clear to us that this move up from here to here is not a trending phase. But on the monthly chart, you remember, it was subdivided into 5. It was a flat correction that was brewing here. But on the yearly chart, it's clear to us that this is not a trending phase. Will you call this on the yearly chart? If you were looking on the monthly chart, I will agree that you will see it as a trending phase. But on the yearly chart now, it's clear to you that it doesn't look like a trending phase. But if you look at this section here, it looks like it's trending now, yes or no? Okay, because it's breaking resistance. It broke this one, it's breaking this one, which is good. All right. How long have I been talking to you now? 31 minutes. All right. So this is a bit of discussion, talking about earlier way guru, blah 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 blah. All right. I hope you have learned something from it. That's the most important thing. All right. And we'll put into use to dissect the price structure like an earlier way guru. So you may say, George, are you out of your mind? Are you going away now? What's the future? Have you forecast the future? What is likely to take place? And I say to you, well, I will charge you for that. And you may say, George, you promised never to charge people. And I'll say, yes, I will not charge you then. All right. Now, let's continue. No, I don't charge traders for anything. All right. I do not charge traders at all. Okay. Okay, free earlier wave strategies. Let's continue. Okay, so what is likely to take place, my friend? That's the question you are asking. Now we break above that 138.2% level. We are above that 161.8% level, which is a breakout zone. The price now at the 200% Fibonacci extension level of the prior trend. You need to acknowledge that level. So there is another resistance above it. So remember what I said also before. All right, this is one thing you need to understand, because now trader will be expecting a correction, yes or no? Okay, so you're expecting a correction here. Now remember what we said before, that anytime we call anything first wave, third wave, and a fifth wave, we should think of what? Earlier wave extension. The question is, will that supposed to be fifth wave be extended and subdivided into 5 mono wave? That is the question, yes or no? If that is the case, I will say to you to watch the level, the 214% Fibonacci extension level of the prior trend, somewhere there in the zone of $100 zone. If we are having a fifth wave extension, looks to me that it will be a fifth wave extension. Let's see. Let's connect the dots, connecting the high of the first wave and the high of the third wave. You remember that? One example there. Can you see that? So that's where is the price finding a resistance right now. All right. And then let's draw. You remember the video that we draw? Draw all the trend lines. Okay. All right. Are you afraid to draw trend line? Don't be afraid at all. It's your chart. Draw it. Draw the line like a king, extend them, or leave them on your chart. Okay, so I'm connecting this point and this one here. This is to focus what is likely to take place, and also to manage, okay, the correction if there will be a correction, because the price will come down, okay, and and try to, okay, ricochet. How do you say that in English? Let me know in the comment section. All right. Bounce around those trend lines. So we are drawing trend lines ready to manage the corrective phase. First line connecting this low and this low here. We connect the high of the third wave and the high of the first wave. Okay, now we have, okay, now another one here, this low and this low here. We connect them all. Don't be afraid, my friend. Connect all lines, draw them all. There's another one we can draw like this. Here, and then we have them ready. If you like, you can also apply pitchfork tool for this session. 1, 2, 3, and apply pitchfork tool, but I don't want to do it now. So if there will be a fifth wave extension, I'm choosing my word carefully before you bash me in the comment section. If there will be a fifth wave extension, the first reaction, we need to watch this zone, bouncing up, watch the intersection between this one, put a bit of color into it to please you Apple computers traders that are using beautiful screen, high definition, blah, blah, blah. All right. All right, so just draw the line. That's what we do. You remember that video, okay? So at the end of the fourth wave, an alien wave guru will draw all the trend line, connect all the dots, and because as the correction, if there will be a correction, the price will be acknowledging those trend lines. So we leave them on our chart, and they will help us, okay, to manage our trade. All right. So that's it. Are we going to have a fifth wave extension? Watch the 214% Fibonacci extension level. If there will be a fifth wave extension, going back again to the yearly chart, right? It's now going up. There is a target level. So why do we care about that? As an alien wave trader, you remember that? Is that the price does not go up or down for no reason. You're always headed to a specific target level. Therefore, as an alien wave trader, we must know where is he heading. Professional traders, because of this inverted round bottom in this session here, talking about the cycle point, they will measure the width of this move and they will project it up like this. There is a target and there is a midpoint target. The ultimate target, because as an alien wave trader, you must know where is he heading. You want to focus the market. The first thing that you want to focus is the price target level. Use your alien wave principle, alien wave theory, alien wave focus with, okay, the price profit target. So there is an ultimate target almost in the zone of 113 zone. If the move continues, the price can go up to that zone, but because that's the ultimate target level, the midpoint target is somewhere here. Let me tell you clearly, okay, like a Lavoisier, I'm going to apply Fibonacci retracement to the measuring stick, and I will draw a line exactly at the 50% Fibonacci retracement level of that one here, and this is it, the midpoint target. I will color it now orange, good, no? In turquoise. Can you see that? That's the line here. Can you believe it, my friend? Can you believe it? Are you seeing the power of okay, price profit target? We are now, where are we now? We are at a midpoint target level. That's where the fifth wave is now. Can you see that? So will you agree with me for the first time after calling me all kind of name that for the first time, George, I like something about you? All right, that using, okay, profit target in conjunction with area wave focus will help us a lot in this messy financial market. You see now, that's the midpoint target. And this is it. And the hedge fund, the big financial institution, always pay attention to the target level because they are dealing with a lot of money and they can't just place a trade and come into the market anyhow. So where are we now? Is there enough room before we reach the target? You see how this candlestick bar push it to get there? All right. This is the point. And then once they reach there, you see, they took some profit there. So draw the trend lines, connect the dots. After the fourth way, draw all your trend line. Correction is about to begin. Set the targets, all the targets. All right? You see here? Now, by using this measuring stick, you can see that you can perform miracles. Can you do that? All right? Okay. Yeah, that's the midpoint target there. So you will tell your client we are now at a midpoint target at 89.50. They will say, how do you know? See, I can't tell you. I'm an Elliott guru. That's a professional secret. It's confidential. And you say, well, if you want to know more, subscribe to 24 Elliott YouTube channel. Ultimate target 113. How do you know? Subscribe to 24 Elliott YouTube channel. All right, now you can see that I'm a bit excited today, and I hope you have enjoyed this tutorial, and I will help you to start adopting, the mindset of an Elliott guru. I consider this tutorial as an essential tutorial that will help traders to dissect, any price structure and to understand the language of the price, to read the charts, and also to focus the market like the professional market analyst. Have any question at the end of this tutorial after 40 minutes long recording? All right, if you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that, Joe, this is another blah blah blah, that's why I hate you so much, the video was so long and you were saying all kind of nonsense, mark it down. That will put me under pressure to improve my next recording. If you think this is an essential tutorial, as I do myself, feel free to share with your friend on Google+, on Twitter, and also on Facebook. This will conclude our discussion today about how to dissect a price structure like an Elliott guru. Happy trading to you all, and speak to you soon.